You ever open your fridge, grab a carton of juice, and not even think twice about it? Well, today, we're going to look at the surprising business story behind those everyday products. We're breaking down the absolutely record-setting year of Lassonde Industries, the company that, yeah, might just be stocking your kitchen shelves as we speak. Right. That carton of Oasis or that bottle of Fruit in your hand, turns out it's part of a massive company that just had a phenomenal year. We're going to unpack the numbers and the really smart strategy that led to their success. And believe me, it all starts with some seriously impressive results. So, what's the big headline here? Lassonde had a stellar year. We're talking record sales and a huge boost in profitability. But you know what makes this story so incredible? It's not just the numbers themselves, it's the tough environment they managed to succeed in. And that's really the key. This was not a year of smooth sailing for the economy. They were dealing with high inflation, supply chain headaches, the same stuff as everyone else. But somehow they managed to come out way, way ahead. This is a classic story of succeeding against all odds. Okay, let's put some actual numbers to that success. In just the final quarter, sales jumped by 4.1%. That's a super clear sign of strong demand right when it matters most. But as impressive as that is, it's not even the most stunning number. So here it is, the number that really makes you sit up and pay attention. Their net profit in that same quarter doubled. That's not just growth, people. That is a massive, massive leap. It shows they weren't just selling more stuff, they were running their business a whole lot smarter. So, you gotta be asking, what was their secret? Well, it wasn't some magic bullet. It was really 4 key things all working together perfectly. They had a clear strategy and stuck to it. They leaned on a whole range of different products. They built a business model that could handle the pressure, and honestly, they just outplayed their competitors in the marketplace. Now, before we look at what they're planning next, just a real quick bit of context. You'll often hear companies talk about forward-looking statements. All that really is their way of saying, hey, here's what we're aiming for. But remember, things can change. It just means these are their goals, not unbreakable promises. All right, a huge piece of this success story actually comes from south of the border. Down in the United States, Lassonde's is playing offense. They're making some really strategic investments to grab market share in what is a fiercely competitive place to be. Their whole approach in the US is about production, efficiency, and just pure scale. They're investing a ton of money into the infrastructure to make more product and just grab a bigger piece of that American pie. It's a real long-term power move. And you know what? This strategy is absolutely working. Think about this for a second. The entire US juice market actually got smaller, but Lassonde, they sold more. They are basically stealing market share from their competitors. And what's driving this? Their own branded products, especially those convenient single-serve sizes that people just love. They're basically swimming against the current and winning. And this isn't just some short-term fluke. They are doubling down on this whole strategy. I mean, they've got major projects already in the works, upgrading facilities in North Carolina and building a massive new plant in New Jersey. That project is on track to be finished in early 2027, and it represents a huge bet on their future growth in the US. Okay, now let's head north to their home turf in Canada. Up here, the story is a little bit different. It's less about building brand new factories and a lot more about using the immense power of their iconic, well-loved brands. I mean, brands like Fruitier and Oasis are household names in Canada, and that deep connection with consumers is a powerful advantage. It helps them get the best shelf space in stores, which then drives sales for everything from their classic juice boxes to their chilled products. So their Canadian playbook is this really smart 4-part strategy. First, use that brand power to get the best placement in the store. Second, run smart, targeted marketing campaigns. Third, be really disciplined with their pricing. And fourth, and this is clever, innovate with new products like juice blends to protect yourself from crazy swings in ingredient costs. It's a complete approach, and it is clearly working. Now, it might seem like everything is just perfect, but a good analysis always looks at the whole picture. So let's turn to their specialty foods division, where, well, the story gets a little more complicated. It really is a tale of 2 different stories here. On one side, their core products, things like premium pasta sauces and soups, did really well. They grew both sales and profits. But on the other side, their summer garden operations saw sales take a dip. Part of that was because it was being compared to a really strong year before, but they also had some internal system issues that cost them some opportunities. But they are not just standing still. They're pushing forward with new ideas to drive growth across the whole division. A key example is their bag-in-a-box aseptic packaging. It's a really clever solution for big customers like restaurants and cafeterias, and they're working on deals right now to get it into more places. So we've seen the big picture, but let's break down that 4.1% sales growth we talked about earlier. Where did it actually come from? I mean, were they just selling more stuff, or were they just charging higher prices? The answer is right here in this table, and honestly, it's fascinating. Price adjustments, so higher prices, brought in over $22 million in new sales. But then look at that second row, the sales volume. While their private label volume, so store brands, dipped a bit, sales of their own big national brands surged and more than made up for it. The takeaway is pretty clear. Yeah, higher prices helped, but strong demand for their own brands was a huge driver of their growth. So Lassonde clearly has a winning recipe, right? They're using their powerful brands at home in Canada while making these aggressive investments for growth down in the US. It let them deliver a record year in a really tough economy. But with those massive new factories still being built, the real question is this: can they keep serving up these record-breaking results?